Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get cut. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. No time to waste. We had the ADP employment change here just moments ago, and it was wow. Okay, so let's just come to the markets. No. We're gonna come to the main thing here, and let me read the numbers out to you and all that sort of stuff. Okay, so US ADP employment change 106K versus an expected 180K. That is a huge miss. That is a huge miss. Let me just come in here to Forex Factory is really good at being able to see what, you know, the history of this is. Bring it over here. Check this out. I got this new little change so that when I click on things, you get this little, you know, isn't that cool? And then it shows me when your mouse is scrolling up and down too. I love it. I'm obsessed with it. But okay, so here's the unemployment change. Okay, so that is a miss. Right. We were expecting 180. Oh, that's not right. There we go. Okay. So it's actually about an average sized miss. It looks like. So average sized miss, but still a miss, quite a miss. So that's really interesting. That really throws I tell you what, the thing is, we got like Federal Reserve meeting today, but like we have a lot of data coming out around this time too. It's way more data than we're usually getting going into a Federal Reserve meeting. So coming over here so we can take a look. Where's our charts? Where'd it go? There we go. There we go. Okay, so treasuries slightly up from yesterday. Man. Okay, so this is the other thing coming in here. Are you getting your CBOT data feed from Ninja? I'm using Rhythmic data, actually. So yesterday, it's gone now, but yesterday, about an hour before the pit close in the treasuries, which is about an hour before the overall market close, somebody came in and put 1,000 lots at every price, like literally every price. So large market maker coming in, I guess executing, and then there was an insane amount of volume going into the pit close. So the end of month flows were just nuts, right? And they were largely to the long side. So you got decent buying throughout the day yesterday in the treasuries, and then in the S&P 500 there was like some serious, and I mean, man, this close was one of the craziest closes I've ever seen. It was an insane panic bid going into the close, and up here at 4090 there was so much volume. Oh my gosh, there was like 100K iceberg riding it up the whole way. It was nuts. All right, so crazy stuff yesterday. You just check the other things. Oil having a recovery yesterday, looks quite nice, as did silver and gold. Copper also having that, but coming back quite a bit more than the others this morning. And you know, let's come back here and check the dollar and Bitcoin. Bitcoin having a bit of a pump, but coming sorry, no, that's the dollar. The dollar, remember yesterday we were above 102 and now we're right back down below it, below 101.5. Bitcoin, yeah, I guess Bitcoin's just still flat, huh? I thought that we had a move in Bitcoin yesterday, but I guess I heard wrong. Now, as for us this morning, that ADP really throws a wrench in things. So the big thing is that today at 10 o'clock Eastern time, we got US ISM manufacturing PMI. So remember that manufacturing purchasing managers index is a very important leading indicator because that's like new orders coming in, right? So and that's more leading than some of the other PMIs that we get. So that one is market is going to be watching very carefully. I mean, the S&P manufacturing PMI too, but especially that ISM one. Okay. And I would think that things are tilted slightly to the upside, at least here in the treasuries, because of the ADP employment change. How the manufacturing number comes out is anybody's guess, I think. What's the estimate that they got here for it? Well, they expect it to be 48 versus a previous reading of 48.4. So still in contraction, but not much of a change from last month. We'll see. That's the number that, if it's different from the expectation, could really move markets. And then we got the Federal Reserve today. And the expectation for the Federal Reserve, I'm seeing across the board, it's a really funny one. It's like, here's what I think is going to happen. And then you start reading all of the analyst reports and they're like spot on with what you were thinking. I was like, oh man, I'm not, it's actually not what I like to hear, because it kind of means, it's just, that's what everybody thinks and there's no real edge. But I think there's a really good chance here that Powell comes out really hawkish. And even though all of the analysts think that it's going to play out that way, it may still kind of do some crazy things. So especially if like the statement comes out and the market buys off of the statement, which wouldn't surprise me, even though I don't expect anything too crazy in the statement. But then he could come out and just like really smack the markets down. So and if he does do that, I think that the passive flows in this first half of the year look pretty good. So it might be an opportunity for us to buy the dip, especially in the bonds. So that's kind of like my line of thinking for today. But I don't think I'm actually going to trade it. I do not feel good. Oh man. In fact, now that I'm coming in here and I'm thinking about how awful I feel, I'm kind of like, oh, I'm really surprised that I'm able to like spin off all this stuff and talk as well as I am, because I feel like dizzy. I don't know what the deal was. I mean, when I went to bed, I was kind of starting to feel a little woozy, and I was like, nah, you're fine, you're just tired. When I woke up, it was so hard to wake up for some reason, so it felt like I didn't sleep, and I kind of feel a little dizzy. I'm not like outright dizzy, but I feel like that it wouldn't take much for like that latch in your head to like disconnect, and then all of a sudden you're spinning, so I must be getting sick. I must have an ear infection of some sort. So because of that, oh man, and it looks like I cut myself here accidentally. Sometimes when you're ADHD, you'll brush along something and like not even notice it. Man, so yeah, I'm mentally, I'm not in a good spot today, so I don't know if I'd be very effective. But first things first, we need to roll over our micro yield futures, yeah. So let's do that. Oh, by the way, did I? No, I did not. Every time I open up NinjaTrader from this workspace, it wants to subscribe. Oh, it is trying to do 223. Doesn't it? Okay, so hold on. It's because of this chart right here. But shouldn't, let's come in here to database management. Update, future expiries. That's curious. Well, that must have something to do with... There we go. I don't know. I don't know what the deal is with that. Some of my instrument settings might be wrong on that. Okay, so I don't think that we have to do anything in NinjaTrader, but we do have to switch these ones over here. All right, so let's do that. In fact, I'm gonna move over to the full thing so you can see how green my face looks. My face, I look okay. I don't know what the deal is. I feel really icky though. So we are moving from F to G. No. Yeah, to G. There we go, yeah. Not a whole lot of liquidity there in the 2-year. Come on. G. February. Wow, there's a lot of size on it, the February in the 10-year. That's interesting. So, yeah, normal days they'll maybe put up 80s, and today there's like hundreds on there. You see that? What's with that? $30 years a little more sparse than it usually is. That's thick. And like, look at the other prices. That's really interesting. So we had all this, well, and you know what? The main 10-year has more liquidity than it usually does. So not as much as it did yesterday. It looks like those robots are gone, but I don't feel very good today, NASDAQ killer. I don't know what my deal is. Feel sick. I'm hoping that once the food gets to my stomach and it starts distributing, I'm hoping that it has to do with more to do with, you know, because I had a really early dinner yesterday. So I'm wondering if maybe that's messing with me. Oh, geez. You coming in just to try and get me to feel what? Question myself. Oh, you know what? I look terrible? Yeah. Wow, no. Oh, you just like the color green on me? I'm not a huge fan of green though. I feel like green makes you look weak. Is that silly? The color theory, I was always told that brown and green makes you look weak. I think I look better with blue. Blue, and then the blue. Oh, wrong way. Blue can kind of complement my eyes, and it's kind of hard to see this morning. One of the things I like about this camera is that it does capture my eyes a little bit better, but I don't feel good. I don't know if I'll take any trades today or not. Make sure that I have my order entry turned off, at least for now. The worst is light blue. I don't know if we're like light blue, but I know. So like, well, it's not just FOMC. We've got like some important manufacturing numbers too. We got PMIs and stuff. Like today should be a day where we should be able to make money, but I'm not feeling in the zone. Do you have access to the treasury? So what do you mean by the treasury pre-market data? I mean, I can look at all of the futures instruments in the extended session, if that's what you mean. Can't everybody that has futures data see the extended session? Or are you talking about something else that I'm not aware of? Well, the rates, so it's pretty likely that we'll see a 25 basis point increase. I would be utterly shocked if it was any. I mean, we always say this, but yeah, it's going to be 25 basis points. Federal Reserve doesn't like to surprise us like that, but I think that the conference could be a big deal today, because you got to remember that we're basically close to terminal interest rates, right? Like they have this one and maybe one or two after that, and that's like very much up in the air, and the market is kind of starting to lean towards that this might be the last one. So what Powell says at the press conference, especially if he starts to give us hints about like what the next steps are from here, that could very, very seriously move the markets. I suspect that what he's going to do is he's going to come out and he's going to say, oh yeah, we totally are leaning towards, raising again in May. Or he won't say anything that kind of suggests that they're thinking about backing off. He's going to continue to be very hawkish is what I think is going to happen. So that I kind of think that the markets could take a hit today. Is maybe that's me. I want that to happen to be able to buy it at lower prices, but I kind of suspect that the market will sell off today. Yeah, last time price flushed on the rates and did nothing. Well, no, that's not true. I mean, you're right. There was like a big move on the release, and then it kind of, slowly went the other way during the meeting, and it was kind of weird. This was December. Wow, that feels like such a long time ago. It's going to be a weird meeting. Yeah, I think, it's traders trading. That's the thing. That's the big one that you gotta. So on the actual release, one of the big things is that a lot of people are hedged, right? And so after the release, they start to unwind their hedges, and that results in certain flows that can be really confusing sometimes. But then when you get to the actual press conference itself, that's speculation. That's traders trading. And so it's very much day traders reading way too much into whatever it is that he says, right? And so you get these huge exaggerated moves over the tiniest of things, right? Today is probably a little bit different because the market is going to be looking for guidance, because we've all kind of been on this, okay, we know what the trajectory is going to be until next February to May time period, right? So now is when we expect to start getting some idea of where they feel we're at, right? By the way, that that ADP number is going to be, oh, and you know what, another one, okay, like these numbers at 8 o'clock, I'm just realizing here, US JOLTS jobs openings, that's another measure that the Federal Reserve has been very has been watching closely and kind of suggests a tight labor market. So that is also a number. If it was different from, I mean, it's just been staying up there. Okay. But if there was like a decline in that number, that could also move the markets big time. I don't have access to it. I had access yesterday. I was told that I have to contact NinjaTrader, but I have paid for all the data feeds. That's weird, AO. I mean, so if you're going through Ninja, I would assume that you have not kinetic. What is the CQG branded NinjaTrader feed? Continuum? Yes, that's a Continuum. Yeah, I would think that you have Continuum through CQG. Yeah, I probably would contact NinjaTrader, but you have the same problem. That's I mean, that's a weird problem. So Henster AO is saying that well, it sounds to me like you're saying, AO, that you're getting data, just not the overnight data. Sounds like Henster is saying that he's just not getting data from the treasuries at all. That's really interesting. Well, they must be having a problem on their end for sure, because you know, it happening on February, you know, kind of suggests it's a technical problem, right? Like they have something set up incorrectly on their end. Thanks for saying that proper are just want to look for the edge. They do. Wait, what? I think I said that prop mostly is making money off of people failing the company. That's why. We'll see what happens. Wonder if it has anything to do with me not being able to. No, because I'm on Rhythmic. That's something. And I fixed mine too. My chart in the 10-year, it's totally doing the right thing now. Yeah. So yesterday, towards the end of the stream, I was spending all this time trying to see if there was something going on in my NinjaTrader that was causing a problem with another application. And I kept messing with it afterwards. And my general conclusion was that although I'm running a lot of stuff in NinjaTrader, I don't have any one indicator that is doing anything funky or has a significant problem in it. And it's just the combination of so much stuff running that, you know, and there's something, so it really is a problem with the pen, because I went and I downloaded like a bunch of, here, I'll show you, because I did one that I thought was kind of cool. Oh, wrong. What was it called? So this one is called Presentation Pointer. And if I activate this one, no, that's not what I want. I want the pointer. There we go. How's that? Look at that. Now you can definitely see where my pointer is, right? and then if I click, you can definitely see that I clicked. That's pretty cool. And then if I hit control, then it draws. Oh, come on. Oh, maybe I turned that off. Live draw with pointer effect. Yeah, now I can draw, see. And see, this one runs just fine. regardless of whatever else I have running. It's not quite as smooth or accurate, but you know what? For what we do. Problem is this tool is worth like 30 bucks. I don't, or that's what they're charging for it. I don't think that's worth 30 bucks. How do you see that the prop firms make money? Well, they definitely make money off of people failing the combines, right? I mean, they have a lot of employees. They pay for them somehow, right? Anyways, so it's definitely a problem with Epic Pen. But I don't know. I don't know about this. Being able to see the cursor that well is kind of cool, but the prop firms do give real accounts. So like kind of the way that it works though is like so the ones that I would be like, wow, is I think there was one that your first like few thousand of gains are 100% you, which is to say they don't take a cut off of like your first distribution or whatever. If they were doing that, that would be like a huge vote of confidence to me, because I think what they're mostly doing is they're catching the hot hand and they're just skimming a little bit off the top, and then when you blow the account, they don't care. And there's definitely multiple. In fact, I need to respond to that email. I got contacted by another one. Just actually, I thought I already talked to that guy though. I think it was Blue Sky. It was the new one. So my ears feel kind of weird, but I'm feeling better overall. So it might have been something to do with being dehydrated or not having any sugar in my blood. I don't know. Yeah, there was only one. Who was it? I can't even remember. It was like, maybe it was Earn to Trade. I don't remember who it was. There was only one that was giving you fake accounts. And I don't even know if they do it all the time. I don't know. There's so effing many of them. There's so effing many of them. Not all of them give you fake accounts, but the ones that do give you fake accounts, that definitely is like a big red flag that like, hey, maybe it was Apex. Big red flag that, yeah, they probably don't actually make money off of anybody actually trading, you know? Like here, so here's the thing that I've kind of been on for a while lately now, is like, okay, if somebody wants to come along and say they're a great trader and they're doing really well, cool, okay, where's your fund? Where's your fund? If you're so good, why don't you go and get your Series 65 or Series 3 and start a hedge fund or a CTA fund and, you know, trade other people's money and make millions of dollars trading other people's money, right? It makes no sense. You're that good. The reality is that they're not that good, and they don't really know what they're, because if they really knew what they were doing, they would know that like the next step after that is to make a fund. If you're that good and consistent and everything like that, right? Okay, so can we extend that argument to the funded trader programs? If they're so good, why aren't there hedge funds that allow you to invest in that, right? Because most of their profits aren't coming from the trading guys. So remember, Futures Trader 71 just did a quick poll amongst his community, and they found that all of their funded traders, like 80 to 90% of the funded traders lost the account within 6 months. So, and that's the one, that's the point that I think is really key. Okay, is that the trading programs have profit targets that are incredibly aggressive and basically force you to trade in an unsustainable way. That's the important thing, I think. This is why I keep coming to this. Why is this the important thing? Because, well, I guess I think that that's the important thing because that was the flaw that I fell for. That was the mistake that I fell for. Was I said, well, the funded trader program, that should be the benchmark. It's a ridiculous benchmark. Like that's the important thing is I don't think that most people should be trying to trade funded accounts, and you should just trade your own account. But if you go and you try and trade your own account and you try and still do it with the metrics that you'd be going for with the funded trader programs, then you're still likely to just blow your account. So really what should we be doing? We should be making our benchmark be more like your typical CTA fund. If you can come in here with a small account and make 20-30% on a year consistently, then that's awesome. And if that scales up, that could be a career, right? But so many retail traders never get that far because they're chasing this metric that is just not realistic. It's just not realistic that you're going to make $3,000 on a $3,000 account every month. This is not. So yeah, that's the important thing. But I don't really care too much about prop companies, We always generates a lot of conversation, but I'm meh. Just makes me feel meh. Especially that there's so many of them. You know what I mean? No. 20%, 20 to 30% in a year. I think that you should be like that your max loss on a day. In an ideal world, your max loss on a day should be 1%. For a small retail trader, I'll give you 5 to 10%, okay? But never more than that. And if you're trading those combine accounts, like you're losing 20-30% a day in a single day on some of these. Some of the passing combines that I've seen. You're really taking excessive risk. Yeah, my ears just kind of feel plugged. That could be dehydration. Maybe I didn't drink enough before I went to sleep. I don't know. I'll try forcing myself to drink a little bit more here. Somebody asking a weird question in Discord, but there is an answer to this. I think there is a bar timer. I get so frustrated with how almost all retail traders are focused on the technical analysis. Like this guy in Discord here, right? Well, he wants to have a timer to know when the candle closes. Who fucking cares, dude? The only reason you'd care is because you want the bar to close and then you can possibly take your trade. And you're supposed to wait until the bar closes, right? So that right away, it tells me that you're doing something that's probably stupid. Probably doesn't work. Man, I saw this one this morning. it's a kind of fun. I will see if 10. You're right, machine. 10% is too much. For a retail trader though, that might just, you might have no choice. Okay, so I'm gonna say, like, the reason I said that is I don't want anybody to say, well, if I don't have a large enough WAD to keep my daily loss below 1%, then I shouldn't be trading. I'm not gonna take it that far. I mean, you can get away with trading more risk than you probably should. Okay, but in an ideal world, 1%, yeah. There's a percentage that high percentage risk should be taken in small accounts because of this perception they lose their 50. Yeah. Yeah. But it's not that they should take a high risk. It's that you kind of almost have to, right? Like, I'm just saying, like, if you trade micro treasury yield futures, a bad day could be 50%, right? Or sorry, not 50%, $50. $50. So if you're trading a $1,000 account, that's like 5%, right? So I think that it's okay to trade micro treasury yield futures on a $1,000 account, because even if you lose $50 in a day, as long as you're not doing that every day, you're still going to be able to trade for a really long time with that WAD. So anyways, so on Discord, on Reddit this morning, there was a post from somebody in the algo subreddit, and they were like, oh, thank you so much for everybody that reviewed my algo last time, made a couple of changes, and here I did it again. And you go in and you look through it, and he's got it going from like 2008 to 2016, and it outperforms the market by like 4 times. So like, it looks like an impressive backtest. But then you look at what he's doing, and he's comparing this moving average to this moving average and using that to determine which stocks to buy or whatever the deal is. And then there are people in the comments, pointing out the flaws in it. So apparently one of the big flaws that he had in this was that he was like invested in Tesla. His algorithm was like invested in Tesla the whole time, and Tesla was not a stock available in the beginning. So it was very much like a survivorship biased algorithm. But I'm just sitting here like, do you really think you're the first person to think that maybe I should use a moving average in my portfolio algorithm? Like, why would anybody think that would work? That something that simple would work? That it wouldn't, because if something that simple worked that well, everybody would be shouting from the rooftops about it, man. Like, seriously. It's just silly. And when this is our lot every day, this is what we're trying to push back against every day, and it's just so crazy to me that how many people, how pervasive it is. It's like every person that comes into day trading. Nuts. It's nuts. Well, this is going to be a long session, man. Yeah, I do feel not quite right, man. I might take the day off from work. It just doesn't feel good. I'll get over. Well, it's been about 30 minutes, so I can drink a bit of Gatorade and stuff like that. I think that the sugar's getting there, so maybe that's why I'm feeling a little bit better. But I must have something bigger going on. I must have some inflammation in my ear canal or something. Because I have some stuff that I want to get to people at work, so I won't completely skip work, but maybe maybe after that we'll see. Maybe I just need a nap. ADP blames the weather for its bad number. That's not true. Maybe it's a reasonable explanation. I can't just immediately dismiss that one. No, I don't need to tell them that. Now is definitely not the time in the technology industry to be getting like a big ego and thinking you're all that, okay? Because tech companies are all about, you might not realize it because we've been on this bull market for 10, 12 years, but the business people, they know this stuff and they're ready to downsize if they need to. And it can be pretty indiscriminate, man. It's pretty indiscriminate. I don't know how to respond to somebody just responded to one of my comments on Reddit. Because I was talking about connecting NinjaTrader to Python with a socket. Can I post my YouTube channel on Facebook ads even if I don't have any video? Why would you do that? I'm told that Facebook ads don't work the same anymore. Like there's been so many people that there was a period where there were people that were just experts on Facebook ads, right? And all of those kind of Facebook ad experts have basically come in and said, you can't just come in and target your audience anymore. It used to be, if you just get the right target and you know, get your settings just perfect and all that sort of a thing, and then you can have massive success with advertising on Facebook. And what they're finding now is that there's too much competition, and that you really have to have a creative ad to have success now. So that's kind of interesting. But the thing that will grow your channel the most is having a good video, and trying to get people to click on it on Facebook doesn't work. So I for like some of my music, I put it on YouTube, and then I would pay for ads, like Facebook ads, and it wasn't really worth it. It just doesn't generate the same amount of traffic that good keyword targeting and good just overall videos are. So if you have a video that is informational and has good information and people find it through search, that brings in more people than anything. Way more than ads. So it's kind of like, why would you bother paying when the free thing brings you more money and it brings you more viewers anyways? I don't want to say money, viewers. TikTok, the amount of follow through from TikTok isn't very good. So like, I've done really well on TikTok, but very, very few of the people that find me on TikTok actually come and become viewers on the YouTube channel. So YouTube Shorts is maybe a little bit better. And are there any words that, I don't think that what chat says affects the algorithm. What I say could potentially affect the algorithm, but I honestly think, like, here's the thing that's weird about it is, so like on the stream, like this is, so in terms of how many people view the stream, the one thing that I think we can do that would have a significant impact on the number of people that watch the stream is the thumbnail and title. Like, that's really it. So, can I make a thumbnail that more people are interested in clicking on? Well, maybe if something about the picture made me look super authoritative and stuff like that, I think that that's kind of the direction I'd have to go. Haven't gotten around to taking new pictures and fixing that, but. Seems like that's the biggest factor. It's the thumbnail. And for the regular videos, we're just good enough on the thumbnail and the titles to have some success, you know? So. So the treasury market's just kind of been bouncing around here at 114.13. S&P 500 hasn't really done anything too interesting either. So it looks like we're very much in a range-bound quiet market. So we maybe don't do anything until we start getting PMIs. Nassim Taleb, if you use ChatGPT to cut corners in an educational environment, someone can also use ChatGPT to check whether you have been using ChatGPT. Yeah, technology could be self-canceling. Volatility units rolling your downfall. Well, that might actually be a good article for Jigsaw. What's Larry saying? The ECI showed encouraging signs of disinflation even in a labor shortage economy, which raises the possibility that inflation can decline with less slack than standard models suggest. Private wages incentive paid grow by paid private wages ex incentive paid grew by 4.3% over the last quarter, consistent with inflation near 4%. But historically, tight labor markets and seasonal factors mean there are still some risks of a false disinflationary draw. Or a false disinflationary dawn. Many contracts reset in January, which may introduce catch-up raises. Estimates show that minimum wage hikes over the last month increased wages for more than 8 million workers. There is also the possibility that sluggish productivity growth and measurement of hours worked out of the office are resulting in underestimates of true wage inflation in the economy. Still, yesterday's employment cost index is a positive sign and suggests some cooling in underlying inflation, even if more will likely be needed to be compatible with the 2% inflation target. My glands are swollen. My body is acting like it's getting sick. Good morning, Lucas. Yeah, 25 basis points. Let's go. Well, keep yourself strapped in here, Lucas, because in about 30 minutes we're gonna get some PMIs, and then at 10 o'clock we'll get the market PMIs, and we will get Jolt's job openings. So we've got like key data before the Fed meeting, right? And then on Friday, we'll have non-farms again, right? Can you believe it's been a month already? Yeah, it's going to be a fun week. I think that the whole setup that we have here with the news and Federal Reserve meeting kind of could make for a really whippy market. Like, I think that there's going to be a lot of people that are going to, they're going to go short or they're going to go long based on whatever happened and then see it immediately flip on them. That's kind of action that you're likely to get off all this. Just remembering a couple of things that I need to do today. I'll write some things down. Yeah, it's a bunch of stuff. A bunch of stuff that I need to catch up on. Oh, I know what I can do. I was talking to my uncle last night. We're kind of planning the next steps on the new desk, and I'm quite excited. I'm quite excited about what we're going to potentially have. I don't, it's not going to be anything that you guys notice because you can't see the desk, but I think it's going to be really cool. So I'm excited to get that done. But then, he doesn't have the best sleeping habits. Like on a Saturday, he usually doesn't wake up until like 1 o'clock. So I have the morning. I have a free morning Saturday. But I've got some things to do. Because I can do my taxes this weekend. That's always fun. And I can do write that PDF, and I know, right? He stays up really late. He's ADHD like me, right? I've been thinking about, I guess because I keep saying this, I've been thinking about this and I've been thinking about this. My stream's got to be really weird for some of you, right? Because it's just Seth's unfiltered stream of thoughts. Insights into the mind of an ADHD man. So TikTok's been showing me some ADHD content. It's kind of picked up on that. And the thing that I keep thinking about over and over again is that because I received treatment when I was very young, I'm really quite high functioning for a person with ADHD. So I can go into hyper productivity, very intentionally on whatever the subject is, and I can use the medication to my advantage. And so I've been able to go a lot farther than most people with ADHD do. And one of the things that I do that is the biggest factor in that is waking up early. Waking up at 5:30 and then spending of course get ready, but then spending those first 2 or 3 hours of my day working on myself, whether it's trading or reading books and learning things, is insane, right? It's not insane. I mean, it's like the amount of benefit that you get from it is insane, because people are more productive in the morning. But when you have ADHD, your tendency is going to be to want to stay up, because your brain just doesn't get the same sleep signals and stuff. So that's why you have to just rely on your routine. So I can pop my ears really easily right now, but it doesn't feel like it's clearing up. I think that really strongly suggests that I do have some inflammation in my ear canal. You know what? Ethan was sick and my wife was concerned about his ears. I must be catching that. That must be what's going on. I'm kind of ready to get into the next stuff. I think I need to do the machine learning, but this weekend I really need to. Actually, you know what, guys? Let's do that right now. What do you think? Because I'm not. I mean, you guys make sure you remind me when the data is coming up, because we want to watch the data. Even if I'm not going to trade it, we really want to watch the market reaction to the data, right? But let's go into the PDF. I'd rather see you trade. I know. I know, Lucas. I'm not going to take a trade today. I don't think it's smart for me to take a trade when I feel like this. I think the one that we want to work on is the strategy PDF, right? You know what? I could, can view and comment. Link copied. I'm gonna give you guys the link to the PDFs, the strategy PDF, so you can suggest. You can use the comments to suggest edits. All right, and you can also read the whole thing. What I've got so far. It's 7 pages so far. That's not bad. So what do I got here? Correlated. So I'm going to read this one section so that I'm kind of back up to speed on where I'm at. All right. Correlated assets. Many algorithmic and market making strategies rely on correlations for their trades. Arbitrage trades are found in the connections between assets. For instance, mining company profits will be directly affected by the price of the materials they sell. So if the price of gold moves up, we should expect the price of gold mining stocks to move up as well. Such correlations are particularly important to keep in mind when watching liquidity. Market makers rely on these calculations to set their best bid / best ask. When the correlated asset changes, the market maker will adjust their bid / ask accordingly. This can happen even without any market orders. This can lead to situations where price moves on very low. So there's an error right there. Moves on very little volume. I've often found myself frustrated when a price that was seeing significant absorption would later trade through the price with hardly any resistance at all. Why was it that traders were so intent on holding the price there last time but don't care now? It wasn't until I started watching correlated assets more that I was able to understand these moves. Market makers were more willing to take fills because their correlated assets suggested it was a good price. Later, the correlated asset moved and market makers adjusted accordingly. Watching correlated assets can also help us confirm or deny our theories about the flows driving markets that day. We might be able to eliminate some theories that don't match up with the direction of flows across multiple assets. So flows should be looked at across the market as a whole. Find out where the money is coming from and where it's moving to. The difficulty with correlated assets is that there's just so many. We have to understand every section of the market and how they will be impacted by different flows. Some of this can only be picked up by experience, watching the flows every day and constantly confirming or rejecting our theories about what's driving them. However, I will attempt to give you a jump start. Here are the major asset classes worth keeping an eye on. I recommend crafting a watch list to keep an eye on each class. Equities, interest rates, energy, precious metals, industrial metals, agriculture, individual currencies, Japanese yen. Some of these I have comments on. So I think that I want to expand what I have written there for the asset classes. Okay, so for this one, for equities, equities are the most popular asset class, and retail traders tend to among retail traders how do we want to put in here about equities? It's worth keeping track of different sectors. Equities. This is... Does anyone know if there's a certain time or times when algos go off in the ES market? Kind of. So, you don't want to come in and like time your orders to be the exact same time every day, because people will pick up on that and try and front run you and so forth. But there definitely are kind of like key times strategically that if you're wanting to execute certain things, you might want to do it. Of course, right at the market open is the biggest one, because there's a lot more liquidity available to you right on the open. I think I skipped this beat last time because I didn't know what I wanted to say about them. Is this? No, it's not my music. I could pull up one of my songs again if you want. I have a couple that are pretty good that I should probably be putting out. This is just the Stream Beats playlist. I can even find it. Oh wow, I haven't touched it since December 21st? Really? Let's see, I gotta make sure that I'm on the... You gotta make sure this is on the right... Oops. There you are. Oh, that's not the right one. I'm still trying to find the right There we go. That's gonna be way too loud for you though, huh? There you go. Getting some selling in the treasuries here. Space music is still very loud. It's probably really loud compared to me. Well, not compared to me, but compared to what we were doing before. Oh, that's too much. It's got to have a little bit of bite to it. There you go. I really like this one. This one's just got like, I think it maybe still needs some work with the dynamics and stuff, but I think it's got a really good vibe. You don't like my song, Akshay? Gosh. There's definitely some real volume coming through in the treasuries now that we've broken the lows, isn't there? Kind of happened right there off of, what was it? The Canadian S&P manufacturing PMI, which was above 50. That's why they're selling that. Turn it down a little bit. Oh, I'm sorry, it's giving me a headache because I kind of have a headache this morning and this is making me feel really good. Yeah, I don't know what it is about it that I like so much. I feel like it's flat. I feel like it's a little flat, but it's just got such a good vibe, and the bass is just really makes me want to just keep moving forward, you know. You want to listen to what autism? No. I like it. It's a good track. Here, wait. Pardon my silence. Do I have? No, I don't have one in a long time. Oh no. Or was it November?
Watch me.
This is a track I've been working on for a really long time, and this is my favorite thing. And I'll make it a little loud for you. I guess it's one of those ones where it's like I just want it to be so perfect, and so I haven't put it out, but it's really close. It's really close. And this one is really, it's got the emotion to it. And it's a remix of a song called Transition by Underground Resistance. So this is like a song you just listen to the words of it and zone out. It's like you zone out, and when you come back to the real world, you're gonna be a different person. That's what I think about this song.
There will come a time in your life when you will ask yourself a series of questions. Am I happy with who I am?
Am I happy with who I am?
Am I happy with the people around me?
Am I happy with the people around me?
Am I happy with what I'm doing?
Am I happy with what I'm doing?
Am I happy with the way my life is going?
Am I happy with the way my life is going?
Do I have a life?
Do I have a life?
Or am I just living?
Or am I just living?
Do not let these questions restrain or trouble you. Just point yourself in the direction of your dreams. Find your strength in the sound. And make your
Here comes the PMI.
Make your transition.
46.9 versus 46.8, so very close to inline.
Make your transition.
Make your transition.
Make your transition. I spend too much time thinking and not enough doing? Did I try my hardest at any of my dreams? Did I purposely let others discourage me when I knew I could? Will I die never knowing what I could have been or could have done? Do not let these doubts restrain or trouble you.
No dejes esas preguntas.
Just point yourself in the direction of your dreams.
En la dirección de tus sueños.
Find your strength in the sound.
Encuentre
And
fuerza
make
en
your
el sonido
transition.
y haga tu transición.
Make your transition.
Haga tu transición.
This is the part that I love so much.
Haga tu transición.
There will be people who will say you can't, but you will.
You will.
There will be people who will say you don't mix this with that, and you will say, watch me.
Watch me.
There will be people who will say, play it safe. That's too risky. And you will take that chance and have no fear.
No
fear.
You won't let these questions restrain or trouble you.
No dejes estas preguntas
You will point
preocuparte.
yourself in the direction of your dreams.
Búscate en la dirección de
You will
tus sueños
find the strength in the sound.
y encontrarás fuerza
And
en
make
el
your
sonido
transition.
y hacer tu transición.
Make your transition.
Haga 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 tu transición.
For those who know, it's time to leave the house and go back to the field. Find your strength in the sound.
Encuentre fuerza en el
It's what got
sonido.
us through in the first place. Find your strength in the sound
Encuentra
and
fuerza en el
make your
sonido.
transition. Just point yourself in the direction of your dreams.
This I kind of have like a little bit of a transformation in the bass at the end there, and if you're listening to this with like a subwoofer, it's so fucking awesome. Anyways, it hits. Don't you think it hits, man? I don't. If you can't listen to that, or do I spend too much time thinking and not enough doing, and it doesn't hurt a little bit? There's something wrong with you, man. Because don't we all do that?
Watch
we
me.
don't, we spend all this time thinking about great things and then we don't do them. Everybody does that, right? So this song, Underground Resistance, they were one of those, black inner city music groups. These guys were house, but it was kind of at the same time in the early 80s that you were getting a lot of rap groups and stuff coming out and saying stuff, and so that was kind of the context of it. This was kind of like, you might be living in the dumps, but you can transition out of that and be whatever you want to be. That's the best message you could possibly get, especially for like that time, and so I really like that track, and I really like my rendition of it. There you go. I'm gonna switch back over to Harris Heller's stuff now. Maybe a little jarring transition there to it, but I made that track. But it's called Transition by Underground Resistance. You'll hear other versions of the track. That's why I just do stupid things on instinct and rationalize them away post factum. There you go. There you go, actually. That's what you gotta do. So, yeah, if you Google Transition, you'll find it. You can read the lyrics of it. That third verse though, man, I effing love that. Especially, it was like, there'll be people who will say, you don't mix with this with that, and you'll say, watch me. It's just, there are times in your life, guys, that you're just gonna have to put 100% trust in yourself, because everybody else is gonna say that it's dumb. That's just the way that people are. It's not a knock on them. It's not a negative on them or anything. That's just what our tendency is to dismiss things. And to really truly have breakout success, you've got to be willing to do those things that everybody else dismisses. You know, like Kanye West is probably the best example of this, right? Guy is absolutely effing crazy, but he was able to have massive success based purely on confidence in himself, right? And how can you have that kind of level of confidence? Because it's what you want to be, right? That what you're doing is not just some whim idea that I had at the moment, but rather this is something that's like I want to become with every fiber of my being, you know? And that song is like, I've never found anything even remotely close to something that's as motivating to go and pursue that. So that's why I remixed it. You don't mix acid with alkaline though. Yeah, there you go. So by the way, actually I was gonna ask you, did you see the treasury market in the afternoon? So I'm sitting here, I was testing things, so I didn't have like my DOMs up, but I did have my market depths tapes on. So I'm just sitting there, hadn't heard anything all day, and then all of a sudden you what the hell? Come over and look at my market depth tape. Somebody had placed 1,000 lots at like 30 prices. So it was literally just like the market liquidity increased by 1,500 at every price within 10 ticks. Crazy. Was probably just part of an execution into the month end. There was definitely some insane volume going into the pit close in the treasuries, and then insane volume going into the close of the S&P 500 yesterday. Yeah, dude, that was one of the most interesting things I ever saw. Of course, I mean, I guess it's kind of in the end not that interesting because we have a pretty good idea of why it happened and everything, and it's not still around, but whoa. I'd never seen somebody add liquidity to the treasury market like that. It was nuts. And then the volume on the close was really like, whoa, man. Wow. I was really hoping that it would stick around. So because it was like all of a sudden we had normal liquidity again. I was loving it. But the other thing that was interesting was like the volume on the close was like really crazy, but like it was like did a big spike up in price and then immediately it came back down. So oh, D is asking me where to find mine. I need to put it up. There's that one part after the I have a part where, you know, it was quieter and you can kind of hear the chorus in the background, but it's a little kind of fuzzy and stuff. That I'm not 100% sure about. A part of it was I put that in there to increase the length of the track, but I do kind of like it. I think that I need to go back and do a little bit of mixing work on it because it's really thick and bass heavy, and I need to adjust that balance a little bit more so that the voice and the melodic elements bite a little bit more. But I really need to put that one out because I think it's so cool. Talking about the last 2 minutes between, yeah, going into the pit close. So the liquidity that we saw stacked was just, yeah, it was end of month targeted. It absolutely it was. Absolutely it was. But I've never seen them add liquidity like that ever. Okay, so we got 8 o'clock coming up here. Now, listening to those tracks took a while. Yesterday was also listing date of 257 new OTRs, so yeah. I've definitely seen, you know, especially when you come into end of months, and usually the end of quarter is bigger, but you'll see like really crazy volume going into that pit close. But seeing a trader come in and turn on their DOM and start stacking liquidity at all of those prices, just all of the sudden like that, I've never seen anything like that, and it was one of the most interesting things. It really was kind of a signal to buy, wasn't it? It was a big warning that, oh, there's somebody really big has to get some work done here. It was cool. I wish that, you know, I had been streaming during that time, because I was just like so shocked. Right? Well, there's some decent amount of volume trading here in the treasuries right now before the open. Or not before the open, just before the news, so. S&P 500's looking pretty good so far, though. Why the long face? I'm not feeling very good this morning. I think I'm coming down with an ear infection. Whoa. Jeez. Okay. ISM manufacturing PMI 47.4 versus an expected 48. Jolt's job openings. Oh, jeez. 11.012 versus an expected 10.3, and we're getting some big downside in the treasury, probably because of those Jolt's job openings, but also US ISM manufacturing prices paid 44.5 versus an expected 40.4. That's not good either. So those numbers right there scream stagflation to me, man. Although I do not believe the Jolt's job openings at all. I'm getting to the point of like, I think that number is just total bullshit. I think that these companies are putting job openings out there that they have no intention of ever filling. They put them out there and then they ignore all of the applications that get sent in. But that was a pretty massive move. I'm actually kind of looking at this now, coming back to the treasury. Well, there's not a whole lot of liquidity there, so I think that I should probably shy away from trying to mess with it here. But I'm surprised that we're not heading towards 3.5. I guess we could try hitting it. That, you know, there's not a lot of liquidity, so you know, it wouldn't take very much to move it. Just like U.S. universities. I really, it's the jobs numbers don't make sense. Like straight up. And now like so many different outfits coming out and basically calling BS on the headline numbers. Well, we'll see what Friday's number is, but that concern that the Federal Reserve is making a bad monetary policy decision based on flawed data is very real. Yeah, I think that the correct trade is sell treasuries. It's just a question of how far they go down, right? Okay, so the liquidity is back. Do you see somebody buying it right there? Look at that. Buying the micro. Like 348. That looks good. Yeah. Oh, jeez. It's so hard for me to just sit on my hands here, guys. I'm trying to gather up the courage, but I don't think I can do it. I think that's a short. Let's just mark that 3.48. I think that what's going to happen is the Federal Reserve is going to continue to be very, very hawkish, and you know what? Maybe the market can handle it. And what will happen is either we'll get through it and it'll be fine, or all at once we'll realize how bad it really, really is, and we'll just see a collapse, like super, super fast sort of a thing. Some of these numbers are a little wild, right? Like seeing the manufacturing prices paid go up while the overall numbers look so bad is, yeah. So let's see if I can get some color commentary in here. Brannigan Barrett, somebody spell recession for me. Ouch. Prices paid is a worry for Fed. Inflation is sticky despite slow demand. New orders as big drop suggesting future demand is poor. Employment downtick is only positive for the Fed, of course. Yeah. And JOLTS was high. Jerome P comes in and says shit is bad and stop putting words in my mouth. I think that the play on the Fed meeting is that on the press conference is that Powell was going to strike a hawkish tone, but we'll see what happens. Well, the treasuries took a good hit there. Let's just note that where we are relatively speaking isn't that bad, and the S&P 500 gave up its gains for this session, but it's just back to the open, so there hasn't been too much damage done yet, but maybe that just means that we're just getting started. Yep. Okay, so I'm seeing a number of people, Jim Iorio also noticing the prices paid component of the ISM release unexpectedly ticked higher. That's the weakness in the equities at the moment, probably. I think that the JOLTS job opening is a factor as well here. Let's see if Zero Hedge has a story about it yet. Yep. Their headline is U.S. manufacturing surveys signal accelerating stagflation in January. new wealth tax in California. Okay, let's read their story. I'm laughing at what Akshay said there about I'm just staring at UNH on the road to being 10% of the Dow Jones. We'll look them up real quick. Wait, are we talking about United Healthcare? Where? Yeah, that can't be what he's talking about. The health of U.S. manufacturing sector continued to decline at the start of 2023, according to the latest PMI data from S&P Global, a bit deteriorating at a very slightly reduced rate compared to December, from 46.2 to 46.9. And the ISM data was even worse, falling to 47.4, below the 48 expected and down from the 48.4, the weakest since May of 2020. With only labor prints supporting macro surprise data, these manufacturing indicators do nothing to support any of the quote soft landing signals. That is the third straight month of contraction for manufacturing. Under the hood, the PMI shows rising inflation, weaker production, and lower orders, screaming stagflation, and the ISM's data confirms the rebound in prices. Chris Williamson, chief business economist at S&P Global Market Intelligence, said, despite rising in January, the PMI remains at one of the lowest levels recorded since the global financial crisis, indicating a worryingly steep rate of decline in the health of the goods-producing sector. Production has now fallen for 3 successive months, signaling a sharp fall in output, which is now becoming increasingly evident in the official statistics and suggesting the manufacturing sector has become a major drag on GDP. New orders are also slumping as demand from both domestic and export customers comes under increasing pressure from a mix of inflation and slower economic growth. The drop in orders also means that excess capacity is developing, which has in turn meant companies have scaled back their hiring and purchasing and are also increasingly focusing on reducing their inventory loads. Improved supply chains and weaker demand should meanwhile help keep a lid on manufacturing price pressures in the months ahead, though a slight uptick in the survey's input cost and selling price gauges in January suggests that the road to lower inflation could be bumpier than previously anticipated, reflecting still elevated prices for many raw materials relative to pre-pandemic levels and sustained upward wage pressures. Finally, as a reminder, it is only the labor market data that has materially supported the strong macro argument among market participants, dominating the weakness in soft survey and industrial data in recent weeks. Does the Fed really want a, quote, strong labor market? It seems to me that the jobs data, it could maybe be not reliable here. I don't believe that JOLTS number, man. I did not realize that United Healthcare was currently 9.65% down. I didn't realize that Goldman Sachs was a close. Wait, what? Shouldn't it be Apple? I guess the things really shifted when the tech took a hit, huh? Because for a while there, the weighting that Tesla and Apple held was nuts. I don't know if so I don't want to go as far as to say that the numbers have been massaged, Lucas. I don't think that I should be saying that the numbers have been, quote, massaged, unless I have some sort of direct evidence that that's what they're doing. It could be based on, It could just be their seasonal adjustments. It could be nothing nefarious, but I'm concerned that the information that some of the employment measures that we're getting here are bad. They're not accurate. And I'm concerned that the Federal Reserve could be making decisions based on flawed data. Of course, given the size of the discrepancy that we're seeing, it totally could be that the numbers have been, quote, massaged, if not like outright corruption going on at the BLS. And if that was the case, that would be a huge effing deal, right? If we go into a deep, deep recession because somebody was trying to make Joe Biden look better, that would be a huge deal, right? Apple dropped post the split. It was second place then. Oh, okay. Oh, and you're talking about the Dow Jones, not the S&P. Yeah, I getcha. Still. You know, with Goldman Sachs, I own Goldman Sachs, and you know, their last earnings weren't very good. The amount of losses that they took on those consumer loans was really bad. And when you consider that, like, all of that was unnecessary and all of that development could have gone into something else, it really does hurt, right? But since that earnings report, the stock has treaded water really quite well. I'm concerned about if we have a, you know, when there's some people that think that we're going down to new lows any day now, sort of, you know. I'm not so convinced, but I tell you what, if we go back into that sort of a situation, I would think that Goldman would probably get hit on the nose pretty good. But I want to keep it. I think that the long term, I still like them, and I think that the next 10 years could be a lot better for banks than the last 10 years because, you know, interest rates are probably going to be higher. We just need to get those spreads steeper, man. I don't know what you got to do to steepen out the spreads, but geez. Some people have been saying that maybe third or fourth quarter the Fed might come in and start doing things to make the yield curve steepen back out, but we'll see. Okay, so get that out of the way. I'm going to get back to doing some writing here. As the most popular asset class among the public, stocks are a key gauge of market sentiment. Oops. It is heavily influenced by people's risk appetite and market very much centers and sets the tone for many other markets, let's say. Do things like what? Outright sell MBS? No. Are you asking what would they have done if they hadn't gone into the consumer business? Yeah. So here's the interesting question. I think is why did they start the way that they did? Yeah, I will be here for the Federal Reserve meeting for sure. You know, the consumer banking is not banking, quote unquote, is not necessarily the thing that they've been good at. Oh, you're talking about the Fed to just steepen the curve. Yeah. No, I think that what I recall hearing about was some sort of Operation Twist sort of a thing. I don't remember the details. It's been a long time since I heard anything about that, so maybe people don't think it's gonna happen right now. I don't know. It's like oh, well, whatever the Fed does, let's hope that it's not nearly as confusing as what the ECB does, or at the very least that they come up with better names for their operations. Because I hate the name TLTRO. But I don't really remember what the deal was, but I do recall them saying that I do recall one analyst talking about, well, okay, like let's say that the Fed pulls this off and like we kind of get as a soft landing. The yield curve is still incredibly flat. How do you deal with that? And suggesting that the Federal Reserve could try some intervention in the market to try and resolve that issue. But the exact specifics of what it was that they were going to do, what they were proposing, I don't remember what it was. It sounded like an Operation Twist, you know, like they did in, what was it, 2018? That sort of a thing. But I haven't heard a whole lot about it for a long time, so. Because, I don't know, I don't think that very many people actually truly believe the soft landing thing, even though some of the data has kind of been suggesting that it looks more likely than it did. By the way, if you'd missed it earlier, we are putting our little strategy document out. So I got the link there for you guys so you can read it and or leave comments. How do I want to say this? It's so hard. It's like I have a piece of information that I know that I want to put out, that I want to write, but like I often don't know what I want to say about it. I'll move this over here so you can see what I'm typing. But this little thing that I had, what is it? The presentation pointer. The problem with that is that when I'm using that, it's like windows don't move as fast and it does something weird. Now, how do we want to say this? And I can just say growth versus value is a particularly important metric. Okay. Well, equities tend to get all the attention. The often neglected bond market. Well, there was definitely a really ugly downturn off of that news. We're at the higher end of the range. You know, they might take a shot for getting back to the open. We'll see. Oh yeah, McCarthy and Biden are speaking with each other at the moment. So that's also going to cause, you're going to get headlines from that later. This is causing concern. Oh, I'm just coming in here and seeing how many people have clicked the link, and I'm really surprised. That's cool that you can see them. Do I not know how to? It doesn't know how to spell panicking? Maybe I just won't use that word. When markets are scared. Let's say energy. I kind of want to mention this whole thing about like there's been some studies that kind of suggest that the last few recessions have really been caused by spikes in the price of oil. Yep, makes sense. The whole of emerging market pretty much depends on imported oil, would cause problems which go to developed market. Yeah, it totally does. Really is. I'm just trying to think of how I present that piece of information. Because I'm trying to keep this as like a really short summary of what the asset class is, what the relationships are, and why it's important for you to watch, right? So energy is an input cost to most other goods. The price of oil getting too high can cause a recession all on its own. It's also it also affects on its own. Every country is impacted by oil prices, and saw this. Making oil a key, should I call it a key proxy to look for, to understand global global growth is a key component of oil demand. Okay, I'm just going to say energy. Energy is an input cost to most other goods. The price of oil getting too high can cause recession all on its own. Oil also gives us insight into what's going on with the global economy. Global growth is a key component of oil demand, and every country needs oil. As the world, I should say, of course, there is a strong desire, let's say a strong push to move away from fossil fuels. So as time goes along, we should expect other energy markets to become more important. Precious metals. I guess I should put cryptocurrency markets on here, even though I hate them. Still sitting there at 25. This is interesting. It's just a little bit slower than I would have anticipated originally. Anthony says you can prepare all you want for the FOMC today, but the money is made watching how the market reacts after the announcement, not what you think will happen leading up to it. Yeah. We got an unusually high amount of stuff going into it, though, don't we? Today has been a bit of a trip. Like, if it had been any other day, I bet you that most of these moves would have gone much further. Roll as a hedge. I'm just going to leave it at that. Precious metals like gold and silver have a historical role as a hedge against inflation. However, this dynamic is driven largely by speculation rather than actual use of the metal. So don't get too frustrated if gold doesn't do what you want. Industrial metals are used by actual business. As such, they are heavily influenced by economic demand. In this arena, I would strongly recommend watching copper. Copper is a strong indicator of global growth and is particularly responsive to growth in China. Agriculture. Everyone needs to eat. That has made agriculture one of the better flights to safety assets during period of inflation. Gold, the traditional hedge against inflation, was pummeled in 2022 while agriculture made strong gains. High food prices will also tend to feed back into inflation heavily. So it's, I don't know how I want to say this. Components of inflation indexes. Persistently high food prices feed into a higher inflation and thus more tight monetary policy. What should we say about the euro? It is a losing currency. And it's a zombie currency. I don't think we should call it a zombie currency. We're looking for information about the euro that could potentially help new traders sort out what's going on in the global macroeconomic framework and see what kind of correlations there are, right? We can call it 57% of the dollar index. I'm going to say the euro makes up over half of dollar. Well, what do we call them? Money flows. What is the word I'm looking for here? Raise. Yeah, it's just a way. What is the word then? What's to say that like, when you're talking about like forex flows, the euro is the largest, right? What would be a better way to say that? But the thing that I want to get across to them, yeah, ask ChatGPT. What I want to get across to people is that watching the money move between the U.S. and man, the largest flows are actually renminbi. Largest financial flows are euro. But what I want to get into is, like, for instance, the relationship between the dollar and the euro can have impacts on people's desire to buy treasuries, for instance, or the people's propensity to buy stocks, because, like right now, there's well, is it really right now? I feel like maybe this flow has kind of already been a little bit past, but there's been some movement. There was at a time movement out of US stocks and into euro stocks, for instance, right? So I'm trying to think of the best way to word all of that to be concise about it. I'm just gonna say there are massive flows of money between the dollar and the euro. Is that due to euro or USD movement, or euro or USD movement due to that? I don't think, for the purposes of what we're discussing right now, that matters which is which. We're only trying to establish that there is a correlation between the euro and other assets that you might have, and giving you enough information to sort out which situations those might be. Euro. There are massive flows of money between the dollar and the euro. That flow of money can impact the demand for stocks and treasuries based on the relative strength of the Eurozone and North American economies. The Japanese yen, highly correlated with treasuries, as the Japanese are the largest holders of US debt. Swiss franc, a strong reserve currency, and flight to safety assets. Who else do we have to talk about? I don't know if the British pound is really worth talking about right now. Isn't that sad? Okay. I don't know why. So why not just straight up say that the 80 odd listed futures on the CME are more or less correlated to each other, so just put them all up? No, because what I'm trying to help them understand is these correlations will change based on what the current economic conditions are, right? So what I've done here is first we talked about why correlations are important to watch. Then we talked about the major different asset classes that you're going to want to watch. And then I go into different types of economic environments. So here I have growing economy, risk on, flight to safety, quantitative easing / buy all the things, stagflation, and then currency movements. Well, it's not practical to put them all up, right? But I think what you would want to do is you would want to say, okay, here's the piece of news, or what I do rather is I say, here's the piece of news that we got today. Okay, so based on the piece of news, this is how I would expect these different classes to move. And then I can go and look at them and say, okay, is that what's actually happening? And that can help me confirm if my understanding of that economic news is actually correct, right? But it's not practical to put all 80 up, right? I have like 20. Okay, so coming back into here, I don't know if I talked too much about the order book and all of that. Okay, sure. Okay. Oh, did we finish our playlist? No, I don't think that that's what you... I mean, I'm sure that people do that. More news / assets being observed, more of this happens. I think that... So for instance, let's come and look at the current market. So what did we have in the current market? Okay, we had ISM report that showed manufacturing activity big down, but also prices up more than expected, and JOLTS jobs numbers that is high, which we're kind of skeptical about that number, but that's what the number is, and we know that the Federal Reserve looks at that. Okay, so what I see is a market that is concerned about stagflation and continued tight monetary policy, right? So that's my theory about what we just saw. So now let's go through and look at all of the different assets that we've got out here and see if that lines up. Okay, well, the treasury market did move down, so that's the first thing, is that if we're expecting Federal Reserve to be more aggressive in their monetary policy, we should see the treasury sell off, which we did. Okay, and when you see that happen, you know that's going to have knockoff effects on most other markets, right? So here the S&P 500 is down. We're seeing oil is down, although not too much. But we look at agriculture not really moving. Copper down. Okay, so that definitely seems to be like continued tight monetary policy, stagflation. All of the hard commodities are down. One thing though that we do have here is like gold initially sold and recovered. So that's a curious one, because that might suggest that investors are expecting the Federal Reserve to be really hard, but that eventually moves the economy into a recession, and that the Federal Reserve needs to reduce interest rates. And then at that point, gold would be the place to, you know, to save your money, essentially, because the value of the dollar is going to go down in that situation. So gold might be telling us something interesting about how the market is interpreting this information, which is to say that they think that the Federal Reserve is going to continue to be tight. But then on top of that, they think that this tightness is likely to lead us into a recession. That seems to be the bet that they're making, right? So that's just a theory, though, right? That's just, okay, those are the moves that we made, and here's what would make sense given what we know about the macroeconomic framework. But something could happen, right? So for instance, maybe later today, oil just like skyrockets, right? We look at it, there's no news, what the heck is going on, right? Well, then we might have to rethink some things. What could be going on? Maybe we're getting signs of really strong economic growth from China, and that could kind of flip everything on its head. You know, this is those sorts of things. And so what we want to do is we want to have our theories and possibly multiple theories about why the money is flowing where it is, right? And then as other things happen, we can compare those things against the theories that we have to see if they still make sense. So you can kind of take a scientific approach to it. You don't want it to be like, oh, I'm just making up a narrative and as I go along. And no, you want to have, you know, you want to kind of have your top theories and then look for things that will confirm or reject those individual theories until you have a really good idea of what actually happened, right? So why is the cash 30-year on the run have an uptick in the yields, but UB's implied yield is down big? I don't know. You say the ultra bonds implied yield is down big? Is it? How could it be? I mean, all of them sold. They do, though. They absolutely. I mean, what you're seeing is either speculator. I mean, after the initial move, what we're going to see is what? Speculators moving, right? The speculators are going to say this piece of news is good for this asset and good for this. You know, they're basically what they're doing is they're judging how other people may potentially move their money based on what that new information says about the current economic conditions and how that might predict future order flows, right? And then we should continue to see those flows happen over time, right? Because it's massive amounts of money that end up moving, right? But, you know, if I, for instance, something that is happening right now that I think really should give us pause is look at the dollar, man. The dollar is like approaching lows here, right? So what does that mean? Because what we've been seeing lately has been like, oh, Federal Reserve going to keep interest rates high. That tends to be good for the dollar, right? The euro is up and the dollar is down. Yeah. The euro is up and the dollar is down. So what does that maybe tell us? So let's make a few theories, right? I think my primary theory is that the market is concerned that the United States is going to have a recession. That's what I think is going on. And I think that what they're doing is they're moving their money over into the euro because they think it'll be safer there. So that's one theory. It could also, though, it could just be a more passive flow related to the Federal Reserve meeting today, right? So for instance, maybe you just want to hedge yourself. You don't want to be exposed to whatever risk could come from the Federal Reserve meeting today. So you just move your money across the sea. Perhaps that could be a reason, right? What else? I don't know. This move right here, one of the things here is like, look, when it happened, the dollar moved up, which is what you would expect, right? It's a flight to safety. Dollar moves up generally means like people are scared. Well, not generally means, but when people are scared, the dollar tends to move up. Let's put it that way, right? Now, much later, we have it going the other way. So the reason that it's moving down may not be related to the piece of news that we got, right? So that would be one piece of evidence that we have that maybe works against theory number one, right? Okay, so you think that the Germans auction yielded 2.3%. And so you think that the money is just going there because of the German auction. Okay. So yeah, that would be, so let's put that as theory number 3. Passive flow. Because of that. Okay, so let's say that we have the Federal Reserve meeting. So what would we need? So the next thing that we would want to say is, what are some things that could potentially happen in the future that could confirm or reject those individual theories as the driver for this particular move, right? So for instance, if Germany had another auction scheduled for later today that did not go well, and would suggest that flow should reverse, but then we continue to see the dollar go down. Okay, so there's one, not today, tomorrow, the day after, next 3 weeks. Okay, so tomorrow. So if we see, if we saw an auction tomorrow, and then that auction, then we didn't see the flow continue to be in line with what we would expect from that auction, that might suggest that the flow could be driven by something else, right? Okay, so now we have a theory, and we have certain things that we can potentially test it against, right? Of course, the dollar's probably going to move like big time here after this Federal Reserve meeting, so it might be a little bit difficult to sort all of that out, because there's definitely a lot of things going on right now, right? I wonder if they love the dollar tomorrow. Well, yeah, so if the scenario that I'm looking for plays out, right, which is that Jerome Powell is very, very hawkish in the press conference, then I think we probably would see the dollar up, wouldn't we? But to have evidence to test the theory, the move would have to have been over in the meantime in a trading. Well, okay, so the theories and all of this sort of thing is not necessarily a part of the active trade, right? So what that is that's us trying to keep ourselves in alignment with what is going on in the market as a whole. And then every once in a while, we'll get a piece of data. So for instance, we think that flows are going X way, right? And we have a couple of different reasons why. And maybe some of the different reasons that of explanations of the flows kind of suggest opposing flows, right? But then all of a sudden we get a piece of information that really bolsters the case for one of those flows, right? That we know, okay, we're really going to see this flow is going to get stronger and is going to overwhelm things. And then we have a trade, right? But we wouldn't have had that trade if we weren't constantly tracking what's going on in the market and why these assets are moving the way that they are, right? Because we wouldn't have the context. You know, we wouldn't be able to come in and say, oh, okay, so what does that actually mean for this thing? Because we didn't know where this thing was in the first place, right? Well, people definitely bring up bias, but that's why the framework that we're using involves having multiple theories and looking for pieces of evidence to confirm or reject those individual theories, and only taking an action when we have a piece of information that really clearly tells us what the situation is and that there's going to be more flows based on that information, right? That's how we remove the bias from it. Well, in this particular situation, we probably could have traded on it, couldn't we? In this situation, if Seth was feeling a little bit better today, we probably could have taken a short here in the treasury. Although we'd probably be a little bit frustrated. We would have only made like 10 or 20 bucks. So the other part of this is, the trader doing the testing of theories is Seth here, right? So here's another key component of this, right, though, is even though the analysis that you're doing doesn't directly lead to a trade at that particular time, just analyzing the flows after the fact and trying to sort out, okay, why did this move, right? That can provide us examples to potentially use in the future, right? That helps us understand the market and what sort of things move the market. And as we're constantly doing that, that's how we're able to get ourselves into a place where, because again, what is the key thing that we have to do? We have to be able to predict orders, right? So ultimately for trading, none of this analysis would be useful unless it helps us predict future orders. So it helps us predict for future orders, one, in understanding the context and what the current state of the market is, so that we can understand that new information and what significance it may actually have. But it also helps us in that maybe we miss a move, but now next time something like that happens, we'll understand it better, and we might be better able to take advantage of that opportunity in the future, right? Analyzing macroeconomics news have never, how can you say that? Like, do we not come in here and look at a news print and then, oh, you know what, it's 9 o'clock. Totally missed the last track of time. I wouldn't be able to take any of these trades off of economic news if I didn't constantly do this stuff. But I gotta go, guys. I'll see you guys at the Fed. We could talk about more.